time for some overlooked stocks. We'll get to Square earnings in a moment. George Tsilis has the movers that you missed in today's session. George, let's start with a little Workhorse real quick, okay? A stock that has been on the overlooked category in the past on this segment. Shares were just obliterated late in the afternoon, down 50% after the United States Postal Service gave a $500 million deal to Oshkosh to create electric vehicles. Is this like a death knell for Workhorse or what?
Well, okay, so I'm not surprised to see the stock down a lot because of this news, OJ. There was a lot riding on for Workhorse, which is basically a medium and light duty truck company. They were looking to get, or we talked about this company, to secure at least a portion of that Postal Service contract, which was, I think, something in the realm of $8 billion in total over multiple years. The stock did rise significantly after Biden administration came in office. There was a lot of hints about moving government vehicle contracts to electric vehicles. That's the specialty for Workhorse. It's not all over for Workhorse. I think perhaps if they secure a portion of this contract, that's what we have to keep in mind. If all they needed was a portion of it to kind of help them stabilize their business. Because, looking at the company prior to the move to the downside, $2 billion market cap, and last year, OJ, they did not even have $1 million in sales. So this is a company that was riding really high on that contract expectation. And again, it didn't manifest and it's down significantly after hours. But it doesn't necessarily mean that they can't secure a contract for some sort of procurement vehicle, from other government agencies, not just the Postal Service. But unfortunate for investors, it just didn't work out.
All right, so the risks of investing in companies that have plans and not full commitments. Right? We've talked about these before, and we've had some of the CEOs on from these programs. We always try to make very clear, what do they have? What are they selling? And then what are they saying they're going to sell? Because saying you're going to sell something oftentimes depends on certain events happening and coming to fruition, which for Workhorse did not happen here. George, okay, you've got companies in the storage space as part of your overlooked stocks today. CubeSmart had a really nice day, up 3.3%. Real estate company technically, but this is about storage, right?
It is. It's a real estate investment trust, CubeSmart. And in fact, they're actually a third-party, essentially, company that helps manage multiple thousands, if you will, privately owned companies associated with storage solutions. And I think this is maybe one of those recovery plays when it comes down to the reopening of the economy. I think right now, people are going to start being on the move when it comes down to maybe selling their home. I think home prices have really been fantastic over this last year. Most of that has to do with the fact that there's a lot of homes in forbearance that are not being paid on, nor are they actually on the market. We may actually see a spring season coming up where people are going to be selling their homes at high prices and maybe looking to rent for a little while to perhaps see prices settle down. So therefore, storage. I think storage right now, and always certainly has been, really a very safe place to generate cash flows. It's a very high margin business. One of the things about CubeSmart is it doesn't actually own the property, so it doesn't have operational risks, or if you will, balance sheet risks. They're really a basically third-party manager of thousands of properties that are held privately by other people. And I think looking at the company's financials, and you look at the stock price over the last year, it's just a steady trender to the upside because of its financial flexibility, its high return on equity, which is around 9%, generous dividend yield, about 3.5%. And I did look at gross margins. This is where it's really a kicker. They don't actually own the properties. They're basically a servicer, close to 70% gross margin. We're talking technology level gross margins, and about 4 times the EBITDA margin growth or rate of change in earnings relative to sales. And you've got a company that pays a generous dividend, but also gives you a nice total return on equity. Okay.
George, so Cube, C-U-B-E, exactly how it sounds. A storage company as a real estate play, kind of in disguise. Also a little RV exposure too, right? Recreational vehicle storage for all those Winnebagos that were purchased. George, let's go over to another one. Mr. Cooper, not to be confused with Dr. Copper that we were talking about earlier. George, COOP, C-O-O-P, up 1.8% today. This is connected into housing and financing of housing, mortgages, right?
Yeah, we talk about home builders a lot, OJ. We talk about banks, but we really don't talk about the other side of this market for housing, which is the home service market. And if you look at Mr. Cooper, I almost said Dr. Cooper, by the way, but
Right.
Mr. Cooper is actually the third largest mortgage servicing company in the country, behind Ocgen and New Residential. This is an interesting company. Now we have to look at its breakdown. It actually originates and also services loans. It does take on some non-bank financial risk from originations, but the servicing side of the business seems to be a catalyst. The other thing is technology. It also has a technology solutions division, which helps aggregate data for realtors, buyers, and sellers, but also for the mortgage brokers who basically originate the dollars and cents associated with the financing. So, but it's a slow and steady improver over the last year. There also seems to be a little bit more improvement in forbearance when it comes down to fewer homes or more homes coming out of forbearance. I do think there's something, as he said, if you look at the date we're in right now, it's almost about a year, OJ, since the lockdowns, and a lot of loans are going to be coming out of forbearance. So I think a couple of things to keep in mind is that forbearance has really hurt the servicers, primarily those that are focused on FHA, which is where Mr. Cooper is not actually focused. They're actually focused in the servicing of traditional conventional loans versus FHA. If you look at their major competitor, Ocwen, they are actually suffering on a relative basis in the last year significantly because of forbearance. But I think if you look at what's happening with low rates, lots of new originations, not to mention there might be some pickup in activity as people had been reluctant to sell their homes over the last year. I think there's going to be a lot of pickup in volume and changing of hands when it comes to properties.
Okay. Haven't heard that name in a while. Ocwen, one of the troubled real estate companies from the past decade, Georgia, that has been making a comeback this year. GT, you got one more for us. Let's switch gears a little bit. Let's go for a big mover. 4% higher, down day. Well, I guess not technically at the end, but Zoom Info. So we tried to find ones that were up today when the market was down. Turns out that we should have just picked Peloton because it came back and went higher anyway. But that wouldn't be overlooked, George. Zoom Info is your last one, ticker ZI. In the comm services space, cloud connection, sales and marketing teams. What is this, a software provider?
It is. It's actually a cloud software provider, and it's an interesting company. We talked about it, I believe, before, but we also talked about one of their competitors, which is HubSpot. And these are a couple of companies. Zoom Info now, as well, is a company that actually is a cloud-based platform for marketing and sales. And I think if you think about what's going on, because of the different challenges or the actual challenges COVID presented from the standpoint of marketing and the way people have consumed their media, there has to be companies out there that help other companies from a business-to-business standpoint adapt to changing environments, and that's what HubSpot does with their platform. So they help with, again, contact and company search. They aggregate data. They use artificial intelligence. It's pretty complicated and pretty impressive technology. But they actually reported some fantastic numbers, and they gave the full year numbers for 2020. Top line sales last quarter did beat 53% year over year, which is right about in line with last quarter, around 56%. But the entire year of 2020 was about 60+% sales. The other thing is they demonstrated really significant improvements in operating income as well as cash from operations. 54% on operating income, cash from operations up 200%, and free cash flow up 84%. So what you're getting here is top line sales and a really nice sort of internal and robust improvement in operating cash is what you want to see, which again flows through to EBITDA. And so I think this is a kind of company that's doing still, I guess, well right now in this technology route that we're seeing. This has to do with the current spend, let's call it, from enterprise spending on new technologies to help, again, market and do services for sales. And I think we have talked also about other industries, like anything that's in the cloud communications, Twilio, RingCentral. These are, again, companies that are still focused on sales today for enterprises versus those secular names that seem to be really the ones that are beaten up in the last couple of weeks or so. So interesting name, really fantastic results over the entire year as well as last quarter, and a nice move today for the stock, which is still trending to the upside.
Okay. George, like the perspective here, a few overlooked companies within today's action. A couple overlooked that are new to the category and one here making a repeat visit, Zoom Info. And thanks also for the spur of the moment update on Workhorse, George. Nice job.
Okay,
Workhorse of our own. Thank you, Mr. Tsilis.